Let's call this meeting to order. The first order of business is allowing Betty. Betty is on the phone to allow her to be part of the meeting. I need a motion on that. Paul, second. Linda, are there any questions? Please vote. Okay. Welcome, Betty.
Thank you.
Okay, next order of business is approval of the minutes. Can I have a motion on the floor, please? Linda, and second, Camille. Are there any corrections? Okay, please vote.
Aye.
Okay, that looks like that passes. Next is informational items, reports, and other minutes updates. First is monthly financial report, May 31st, 2026. Julie?
Good afternoon. We are now in the month of May, so if we do a straight line projection, meaning we take our budget divided by 12 and times 5 months, we should get about 41.7% of our budget for revenues and expenses. So for revenues, we are currently at 30.8 across the county, and for expenses, we're at 31.9. And then the general fund, we are 34.7 for revenues and 35.7% for expenses. Last month, we did a little bit of a deeper dive on PPRT, and the only thing I want to cover on the major revenues is that now we're in budget season, so I have updated in the financial packet what the major revenues are projected. So that would be on starting on page 15, 16, 17, 18, and 19. For each of those, we have what is projected. And as we go through the meetings, especially looking at charges for services, we will be looking at those numbers closely and then trying to have a good estimate if there's any numbers that need to be changed. Looking at revenues, so during a year, we have revenues that come in normally, and then we have some revenues that are either a one-time revenue or revenues that don't come in until the year end. So if we look at charges for services, if we back out anything that is a one-time revenue or anything that is generally recorded in period 13 to try and take away anything that's anomaly, year to date, we're at 40.93%. So we're close to that 41.7. And then for fines, we are closer to 51.8%. So that's over. So I just wanted to kind of give those perspectives because in this report, we don't really have those numbers to pull in. Next, you'll notice for in the general fund for legislative, that's a little over. That is because there's the membership dues that were paid. And so that just increases the inflation of what that budget is, but I believe they will be underneath the budget, which is actually the county board's budget. Election commission, they also had two expenses that were higher, but one was for software that's paid earlier in the year than the others because they had a spring election. So this month we did have a few funds that are outside of policy. One of the funds we will be bringing, Sean will be talking about, that will be passing the next, I believe it'll go to September committee, is that the wind energy fund will go from 16% to 0. So whenever we get a new fund, it automatically is set to 16% unless it's supported by property taxes. And then if anything is grant funded or anything special, we come and ask for that to be named specifically in the policy. So since that fund is primarily passed through and only just get interest, we'll put that to 0%. So while it looks like it's under on the financial report, it's just temporary. Next, we have two grant funds that once they have revenues recorded for the expenses they have already been incurred by June, that should go back to within policy. And then last, the care and treatment, that will come in at or above policy by the end of the year, but that once the cash flow comes for property tax, that should go back and fall off our radar. So those are the highlights I had for you today. If you have any questions, I would be happy to answer them the best I can.
Questions? Okay. Long-term care.
Good afternoon. The Long-Term Care Services Fund report is in your packet. I'm happy to answer any questions. The current fund balance is at $475,000 and some change, and we are still on track to retire the bonds when they're callable in 2032.
Questions? Okay. Next, we have the June 2026 accounts payable review.
That report is in your packet. If you have any questions, I can try and answer them at this time.
Okay. Steve?
I have one question. There's a charge in here on page 30 for a business called MGT Impact Solutions for $110,000 using ARPA funds. There's two lines in there, one for consultant and the other line is for license software. Just trying to understand what this one is, and I'll just let you look at that for me. It's again page 30, and then it's also in the department under the administrative department. It's called MGT Impact Solutions. About 40% of the way down on page 30.
We will look that one up. I'm not real sure what that is. It says it's for security systems, so we will get in, and then I can send an email to the committee and let you know the answer. If that's okay.
Okay.
Any additional questions? Steve, is that the only one you had?
No,
right.
that's all for this discussion.
Okay, thank you. Okay, we are at Peoria County Capital Projects Funding Sources and Progress.
Once again, the report is in your packet. I am happy to try to answer any questions, or if we don't have the answer, we will send an email to the committee.
Questions? Okay. Moving on. General Fund Vacancy Wage and Benefit Update.
Okay, so this is related to the action that was taken last year with regards to the sweeping of general fund vacancies that were appropriated for 2026. There were 25 positions at the end of last year as part of the budget process that were swept into a separate line in the general fund for various general fund departments, with the intent being that with the resolution that the board passed, that resolution stated that the county administrator would be authorized should those positions be filled and the department need the funds, then the county administrator would reallocate those funds out of that line back into that department's budget. At that time, there were 25 positions. I believe Heather gave an update to the board in February of this year, and at that committee meeting, some of the discussion during the committee meeting was led us as staff to think that maybe the intent of what the resolution stated versus the intent of the committee might be a little different. So wanted to give you another update on where we're at with that, and then provide this to you just for informational item this month, and then we will be bringing back, should the committee want, a updated resolution that will more align with the intent of some of the discussions a few months ago. So for an update of those 25 positions, since February of this year, 4 of those positions have been filled. However, there was no funding swept back out of that line into the departments because those departments were the sheriff's office and the state's attorney's office. And at the time, because of other vacancies, they had adequate funding. And so we did not believe that they needed those funds put back in their budget. So everything that was in place at the beginning of the year is still in place today in that line item. Part of the conversation in February was that the current resolution on file would have provided a prorated return to departments since vacancies were filled throughout the year. The discussion at that committee, the way we understood it, and please correct us if we're wrong, is that there was a desire for, if there's a request to fill a vacancy and move the funds back into that department, for the conversation surrounding that to be held at the appropriate standing committee that that department reports to. And so part of what is in your packet is updated resolution language that we would then bring back next month. So it's the underlined section there on the first page of that informational item. So Scott, Julie, jump in if I missed anything, but happy to entertain any questions you have, or if you take it back and read through it and want to talk to us before next committee, that's good.
Are there any questions? Okay, I guess we'll be talking about this over the following few weeks. So thank you. Okay, financial policy revision proposal.
All right, this was an update to the financial policies that Heather had discussed and Scott had reviewed as well. This just updates the financial policies with the intent being, again, this is for informational item or information only this month, and formal action will be taken next month. We wanted you to have adequate time to review the proposal. But what this does is it basically just updates the current policy to reflect current practice as well as best practices, and also provides a little more clear direction to the team. So a couple highlights, you'll find that the new language specifies that appropriations need to be made mid-year if unanticipated revenue is received mid-year. So instead of waiting to the end of the year to do that appropriation, we would do that so that they coincide. It also specifies that where there is special revenue funds available, that those would be utilized first versus using general fund dollars. So most of our special revenue funds have some constraints surrounding what those funds can be utilized for. So just ensuring that we're utilizing those first for those purposes before we use the general fund. Also specifies that when vehicle or capital items are presented for approval, that it is not just the cost of that item, but if there's additional costs above and beyond that. So for example, if we're requesting a new vehicle, a new patrol vehicle, that request needs to include not just the vehicle, but any shipping, the price of the cage, the price of the radio equipment, all of that, to make sure that we're adequately funding those items within the budget, in the capital budget. Some cleanup to include the community workforce agreement language is now in the policy. And then finally, that before the board would approve a collective bargaining agreement, that long-term personnel projections would be provided to the board so they can fully understand the impact of those. Happy to answer any questions.
Any questions? No questions? Okay. Moving on, we are at Strategic Plan 2026 Q2 update. Hi, Melissa.
Hello, everyone. You have in front of you the second quarter strategic plan action items update. The good news is that one of the two items for this committee was completed in the last quarter. That's the update of our travel policies. And the finance team is plugging away and about 60% complete on item 21, updating the purchasing ordinance. I would be happy to try to answer any questions you have or defer to some of my colleagues here.
Any questions? Okay, thank you.
Thank you.
Doing a lot of good work. Appreciate that. Okay, we are at FY 2027 budget, and as I said last month, we were going to be talking about the jail. So Scott and team has prepared a slide deck for us, so he's going to be going through that.
Thank you, Madam Chair. Megan, would you toggle the screens, please? And then for those of you that are tactile, Shauna's got a handout for you. We'll also distribute this electronically via email to everyone, including the members that aren't present.
Thank you.
All right. Almost all the way around. So numbers going to be a little hard to see, but those of you that have paper copies, you'll be able to follow along. First and foremost, everything that we're going to share today assumes the pay-as-you-go policy directive that we've been working under now for a little over a year after we had the last board-wide policy discussion on the jail itself. There are two tables on this first slide. The first one is a list of sources that Ms. McCord had prepared prior to her departure. There were a couple of things that were missing from it that we've added in the bottom table on the page, and we've also shown it over a 10-year period. So a couple of things that we wanted to point out, and I'll also add that as an example, you'll see the row general fund vacancies. We only have FY27 shown at this point in time. As we move through time, we can add additional data in the out years. But a couple of items here that we wanted to show that were not originally in Heather's original list. The action you took during the adoption of the FY26 budget to cut the county board's travel expense for this year at $20,000 and to dedicate it to this project. That was a vote you actually took, so we felt it important to show here. In conversations with Chairman Dillon and the sheriff over the last several months, we're looking to target $1.5 million a year in public safety sales taxes that could be put towards this project. ARPA broadband. So Comcast, I think, as we communicated out to the board a few weeks ago or several weeks ago, shared with us that based on timing of award from the state of Illinois for their 3 broadband grants in unincorporated Peoria County, that they had little confidence that they would be able to spend these dollars by the end of the calendar year, which is a hard and fast deadline from the U.S. Treasury. They chose to go without our local match, which means that frees those dollars up. Before Heather left, she worked out the accounting, and it's reflected in our second quarter report to the U.S. Treasury that this $1.67 million has been applied to the Courthouse Plaza project, and that has freed up an equal amount from the capital project fund that can be reallocated into the jail project. So while it says ARPA broadband, and that really is the original source, we're really talking about capital project dollars based on the accounting that Heather worked out before her departure. We also have interest income. We have county state capital or Keystone dollars in here. If that's the policy decision of the board. There's also money from capital projects and public facility sales tax. Back out in 2033, we think this, based on our estimates, there could be at least $1 million available from the long-term care fund in terms of interest income that we're continuing to earn and will earn. Those bonds get retired in December of 2032. So those dollars would become available in January of 2033. We do know that both Congressman Sorensen and LaHood co-sponsored $2.5 million in the federal budget that is supposed to start October 1st. Don't have a high confidence level that it'll be adopted by then, but when the federal budget is adopted, there is $2.5 million for this project in the appropriations. We've kind of talked tangentially with the state's attorney about some opiate settlement dollars. We've put it out in 2036 here simply because of the timing that might be associated with when we can get to the behavioral housing phase of the project. And then we acknowledge that while we don't have any other grants today, there are opportunities for other grants in the future. So we've got that row in there for future purposes, just in case we're able to secure grants going forward. If you're more of a visual person, the next page shows this in a stacked bar form. It's the exact same data, just presented graphically. Each color represents a different one of those rows in the table that was on the previous slide. And then just to kind of show monochromatically what those look like, we've got it here, and then labeled by year what type of sources of funds we have available. And as that table shows and as the previous chart shows, we have a pretty significant funding stack of a wide variety of different sources. Let's look at uses for a second. Right now, we're working with a low estimate and a high estimate for each phase. So we've got phase one, which is the kitchen and laundry. The low estimate is $7.5 million. The high estimate is $9.5. Phase two is mechanical, electric, and plumbing. So that's our central plant, all of the mechanical systems. The current low estimate there is $18 million. The high is $22 million. And then phase three is the behavioral housing unit. That currently has a low estimate of $6.5 million and a high estimate of $7.5 million. What we then did is, knowing that sequentially we can't do all three at once because we're looking at a pay-as-you-go type of an approach. We asked, from a construction standpoint, PJ Hare to give us some estimates on what inflationary adjustments that we could or should be making to our projections. And they came back to us and said that for the foreseeable future, you should assume a 5% annual increase in labor costs and an additional 5% annual increase in materials. So that's 10% a year. So when we adjust for inflation, we know that we're going to be going out to bid later this year on phase one. So we kept the kitchen laundry project unchanged. But phase two has the ability and the chance, based on inflation, to grow to almost, on the low end, $24 million to almost $29.3 million. And then phase three, those numbers almost double based on the timing of when we would be looking to maybe do phase three. So let's marry up sources and uses together. Sources are in the green, uses are in the blue. To be the most conservative, we took the high estimate for construction and the high estimate that's been adjusted for inflation. So what we see here is based on revenue sources that you've already appropriated and planned for in the FY26 budget, in combination with what we believe we'll have available in calendar year and fiscal year 27, we have more than enough money available to fund phase one. In fact, we should have money left over. When we take what's left over after phase one, we apply it to the revenues that we expect to apply in fiscal years 2028, 29, and 30. We are short of being able to hit and pay for 100% of phase two in 2030. Now, phase one, the kitchen and laundry project, that's probably going to start construction sometime next year, and I think a conservative construction timeline is a 15 to 18 month construction window. It's probably going to be faster than that, but I'd rather hedge on a more conservative timeline. And then, as we're working on the construction of the kitchen and laundry, we'll start with the engineering associated with the mechanical systems and start to working with PJ and their team to refine the costing of what that project is going to be. What that does, though, is it allows us to have a really good start on phase two, but it does not allow us to complete phase two in one fell swoop. So the pay-as-you-go strategy will have to play itself out over time. And then at this point in time, we think because we're going to need some added years to complete phase two, we really wouldn't be looking to do construction on phase three until roughly 2033. That could change based on a whole bunch of variables and factors. But right now we've got slotted in 2033. As we saw from the cost escalation inflationary adjustment, the cost of that project is going to roughly double from what it is today, whether it be on the high end or the low end. So that project, we absolutely won't have enough money on hand to do that when we get to it. So we may have to save up for a number of years before we can actually implement it. If you want to look at it from a cumulative standpoint, which is the last slide, this kind of shows where we've got adequate money between this year and next year to do phase one. Then we build up the green over what's left over in 27, plus 28, plus 29, and that gets us about 3/4 of the way there to do phase two. But then, even though we're going to be putting money back into the project, we're still short to be able to pay for phase three in 33. And then in years 31 and 34, we've applied that construction cost, that is the blue column, against those revenues. So it does require, a good vigilance in terms of being able to follow the pay-as-you-go approach. And I think it's worth noting that the schedule may have to get extended based on how construction costs are expected to escalate with inflation and the money that we'll have available. Now, obviously, that schedule can change greatly depending on other revenue sources that could come to play. We could get additional congressional appropriations for phase three. Maybe phase two, but more likely phase three. We could apply for and obtain competitive grants for the behavioral housing unit in phase three. So that may help us with that project. But in terms of being able to pay for everything at once, a pay-as-you-go strategy is not going to allow us to have 100% of the dollars in the bank today or tomorrow to fund all three projects. We'll have to spread it out over time, a consequence of spreading it out over time is costs will escalate. Happy to answer any questions.
Any questions for Scott? Steve?
First off, thank you for working ahead on some of this. I know this was on my hot buttons last year, so I appreciate some heads up. I guess my first thought is on the page with all of your data table. Is this including all of the other infrastructure budget items? Because I know Infrastructure Committee has a plan. Are they being funded by other sources, or is this taking money from infrastructure facilities in general, pulling it away?
Great question, Mr. Ricker. So this takes a sizable portion of those dollars that are available away. It does leave some, but the vast majority of these dollars would be directed to the jail project.
I guess I'd like to see a bigger picture, and maybe Mr. Smith and Ms. Woods can put this into their strategy, because they're developing I'll say the bigger strategy for facilities. I don't want to take a narrow approach of, okay, the JMP is this, but we threw everything else out. So I'd like to see it in a more inclusive plan for facilities.
Sure, happy to do that. Inclusive of the JMP, our 5-year capital requests are somewhere in the neighborhood of $70 million for our buildings. Mm-hmm. So the jail is the largest chunk of that. But if you look out between FY27 and 5 years, we're in the $70+ million range for all requests that are known at this time.
Yeah, we just need to prioritize. I know the jail's been a big priority, and this board has made it a high priority, which is fine, but it'd be neglectful on our part if we threw all the money at the jail and the board 4 years from now said, whoa, wait a minute, what about the fleet garage, or what about, it's like, well, we had a narrow view and we didn't take that in consideration. So pull it together as a full plan. I'd love to see that, and I think it'd be good for all of us. Thank you.
Additional questions? Eden?
As we look at borrowing from the Keystone Fund, I know it'll be a board decision as to how and when that gets paid back, but do we have any statutory rules or anything about when it has to be paid back, or that it absolutely has to be paid back?
Great question, Ms. Blair. So the county received 4 different identical grants that seeded the Keystone Fund that originally totaled $10 million. Those grant agreements are technically still in place. They have 2 parameters on how the board can spend those dollars. One is economic development, and it is not defined. So it's very intentionally vague. The second allowable use are capital improvements on our own facilities. In having Baker Tilly look at it, who is our current external auditor, there are 3 possible funding uses if you wanted to use it on the jail. One, you could just make it an outright grant, and those dollars are spent. Second, you could structure a forgivable loan where maybe if certain milestones or criteria are met, then we don't pay ourselves back. And then third and final would be structuring a more traditional internal fund loan, which again has infinite options in terms of, do we charge ourselves interest or not? If so, how much? What is the term? For how long or how short? So all those types of factors would be completely dependent upon how we would want to structure that.
So my only comment would be let's just make sure the board makes that decision, and it's not something that we borrow the money and decide, later we'll deal with how we're going to pay it back, because then it's just going to get forgotten, right? So I understand that that's going to be our decision as a board. I like the idea of paying it back so that we can then once again pay that we can lend that money out to others. But that's my personal opinion.
As part of that, we would have to identify what the revenue source is to repay ourselves.
Danny?
I'm just curious how how this would qualify for economic development to spend it on a jail. And then I guess my second question would be, what about the tax that we ran to pay for facilities, and why is that not being spent on building the jail? Why are we spending Keystone funds on that?
So I would say, related to use of Keystone dollars, you can use it because it checks the second box. We're doing capital improvements on our own buildings. Second, Keystone was put in here. Heather put it in. I don't know if I would recommend it. I'm not in a position today to say yes, I would, or no, I wouldn't. Regardless of what I recommend, we'll execute whatever the majority of the board wants to do. In terms of the public facility sales tax, which is the museum sales tax, that is, you'll see that about 2/3 of the way down on the lower table, that gets turned off at the end of the decade, absent the board going to the voters and asking for it to be extended, and then the voters approving that ballot referendum. So that is, we are using, we show here that is an eligible source, and we would propose to use it, but it is a source that goes away at the end of the decade.
I guess my only comment would be, when I think of economic development, I don't think of a jail qualifying for that. So I know we've had a lot of conversations. It's also a strategic goal of ours, but I don't think any one of us, when we sat in strategic planning, envisioned a jail qualifying for economic development. So that's my only comment.
Additional questions or comments? Okay, appreciate everything, you putting this all together. It really gives us an idea of funding. So, okay, we are moving on. We have no resolutions, and we are at committee action, which is a review of executive session minutes. Can I get a motion on the floor? Paul, second. Camille?
Yes, thank you. It's a recommendation of the state's attorney's office that all previously held minutes continue to be held, because the reason for the confidentiality still exists, and to destroy executive session audio recordings that are more than 2 years old, except for those that relate to pending litigation.
Any questions? Please vote.
Aye.
Motion passes. Thank you. Is there any discussion? Public comments? Miscellaneous? Yes.
I shout out to the team. They got me an answer on the question that you asked. That was a vendor that it was approved by the board for the IT threat detection and security system. It was allocated for ARPA funding. And so that is the second of 4 invoices, or I'm sorry, third and fourth of 4 invoices. And so that closes out our ARPA allocation. So that's for threat detection, security related to IT, and those types of things. So that's what that was related to.
So it's a combination of consultation and software?
Yes. Yes. It was 50,000 for one, 60,000 for the other.
Okay, thank you.
Anything follow up besides that, Steve? Okay. Any additional miscellaneous? Okay, we're adjourned. We'll take 5 minutes, and then we'll start on executive.